Guys, welcome back once again. So this is Mitigation Imbalances part 2. I had to cancel the previous video. I just had a phone call, so we just are gonna continue now. Right, so we highlighted these areas and we said that we were gonna use the rule of 30, of course, to confirm them if they actually gave out an entry or not, and was the entry rather profitable. So judging by our first zone, right, so we had this rally of price up, right, and then we now come to see that price is now failing to break this structural high right here, right. So price failed to break this high, right, thus leaving out this break of structure right here, right. So this structure was broken. So once this structure now is broken, we wait for what? For mitigation of what to occur? Mitigation of unfilled imbalances in S&D zone that can be potentially hold, right. So we can see this little supply zone right here, right, and once you zoom into that, you'll find out that there was imbalances here, right. So there was imbalance and it wasn't filled 100%. So this in itself is rather a good zone in you to wait, right. I mean, a hasty trader would have, okay, we have this, right, you would have sold here. Of course it held, but your stop loss will be rather high, because if you did sell in this one right here, it means that for your stop loss to actually hold long term, it means that you would have kept it here. So that's the 20 pip stop loss. That's high, right? So what we always do is minimize the risk, because the risk is the only thing that you can control in this market, right? So as a patient trader, you would have easily waited for price to come test that, right, and look at what price does. Price comes and tests. Now coming to the idea of using a stop loss that will hold, it means that if you would have say take an entry here, right, and stop loss right above here, it means that you would have been taken out by this small absorption move, right. This move would have absorbed you and liquidated you, leaving you as liquidity, taking you out of the market while the market is still continuing positively, right. You're right, your setup is right, but you just didn't use a sufficient enough stop loss. So this is why we recommend sufficient stop loss. So instead of having a 20 pip stop loss, you now have a 14 pip stop loss, right, that holds, right. So this trade would have held, and the minute that this major structure right here is broken, right, as the minute this major structure here is broken, your trade goes to break even. So you're never gonna take a loss in this one. And for those who have who value every pip they take, this is a good place to take some partials, right, some partials. So you can take maybe 30, 40, 10%, whatever. So as you can see now, what price does is that let's drop this, let's say we add this sure. What price does is that it doesn't actually hold to the end of your target, because your target is way down there, right. So once what price does is it takes you out at break even. So if you are a person that secured some partials maybe here and here, right, so these major structural points are good places for you to take partials, right. So if you secured some things here, it means that although yeah, this trade took you out at break even, but you did gain something here and here, or here or here, right. So you didn't actually get out with nothing, you did get out with something, right, and that's a good thing. The most important thing is that we didn't take a loss, because this trade was already at break even. So it took so yeah, price came, took out and liquidated these highs here once again. So now we see that by using confirmation, this actually this setup here did work, right? Using the 50% of mitigation, it did work. And actually for a trader who values their pips, they got out something there, right? So let's see if the next move actually did leave an entry or not. So again, we have this rally of price up and this move down, right? As we can see, we have these breaking structures right here. So let's say our major structural point was here, right? So the minute this structure here is broken, you're valid to look for entries. So where was your entry, right? So coming now to this area, we have this beautiful setup here where we have this breaker structure, right? This move down, and we do have this supply zone, the last down move, the last up move before the down move, right? So by using this, it means that we now apply the same rule, right? 50% of your mitigation. It did mitigate, it didn't mitigate 100%, but it did mitigate 50, right? And well, for using 50% mitigation in these lower time frames is less riskier, right? Because even though it's gonna extend your stop loss or something, let's say you just left it there because you're in the middle of the thing, right? Yeah, so let's see if this actually comes to hold, right? So as you can see, yeah, it does hold. As you can see, yeah, it does hold. Let's say your targets are just way down there. So once the minute so this structure is broken, so we had this breaker structure, this test, right? And this breaker structure and this test, it means that we do not have a sufficient reason for price to come back here because this zone is already tested, right? So the minute this structure is broken once again, this your trade comes down to what? To break even. So you're never going to take a loss there, right? Because there is no reason for price to come here unless it's changing its direction, right? If price is to continue lower, then it just it'll just come to attack these lower liquidity points. But there is no reason for price to come here because even if you look at the mitigation, everything up here is pretty much filled. We don't have imbalances, right? All moves were filled, all imbalances here were filled with this one, and all imbalances here were filled with this move. So we don't have any reason for price to come back here. So just in case, as I always say, you have to take partials. But this is not like any financial advice. This is just based on your risk appetite, right? So the minute like this structure over here was tested, so the minute price reached here, it's a good place to take some partials while your trade is at break even, meaning that you're never gonna take a loss there. If you are taken out, then at least you are taken out with something, right? And you can take like this maybe here, right here, to be your next partial target, and this right here way down here, this is your other place to take partials. So this in itself is the general idea of mitigation and imbalances. Price leaves a gap, it comes back, it mitigates that gap, and it leaves, right? So um so yeah, that's it on this one. Yeah, I hope you're going back test this stuff, and have a nice day, have a nice trading career, and peace.